Hey everyone, my name is Tim, and today I'm going to be doing a stock review of a stock I did last year, but I'm doing a refresh going over how the financials may have changed, how the stock price may have changed, if their dividend rate has changed. So this is going to be a monthly dividend stock. It's going to be the Realty Income, and I'm going to be going over also if there's any good options. Typically, this one has a monthly option, so it's not good for income, but it's good if you want to get a discount and get paid to own 100 shares if you're interested in that for the dividend. So that is an option just to earn a little bit of extra money, lower your cost basis for the stock, and still be able to get the dividends as long as you get it before the ex-dividend date, which tends to be towards the end of the month. If you liked the video, don't forget to hit the like and subscribe. It does greatly help out the channel. So currently, or Realty Income Corporation is trading for $64.87 per share. It does have a funds from operations rating of 4 and a price per funds from operations of 16.24. If you don't know what that means, you can Google it, but basically it just means how much money they get from cash flow, not counting any capital gains that they have from sales of their properties. They have a dividend yield of 4.58% and a market cap of 39.01 billion. They are down over the last year by 1.82%, and for a year to date, they are down 8.89%. Also, as for some news that's concerning Realty Income, they are filing to sell 120 million shares under a forward sales agreement as of June 16th, and on June 14th, they rose their monthly dividend by 0.2% to 0.2475 per share. Their company profile is that they're an S&P 500 company dedicated to providing stockholders with dependable monthly income. The company is structured as a REIT, and its monthly dividends are supported by the cash flow from over 6,500 real estate properties owned under long-term lease agreements with our commercial clients. To date, the company has declared 608 consecutive common stock monthly dividends throughout its 52-year operating history, and increased the dividend 109 times since Realty Income's public listing in 1994. The company is a member of the S&P 500 Dividend Aristocrats Index, and additional information about the company can be obtained from the corporate website at realtyincome.com. They have 369 employees. They were founded in 1969 and are based in San Diego, California. Here's the basic dividend information. Like I said in the first part, they have a 4.58% dividend yield, an annual payout per share of $2.97. The only thing here that kind of makes me a little bit cautious is their payout rate at 282.45%. So that means they're paying out almost 3 times what they're taking in. And I do realize that as a REIT, they are required by law to pay out 90% of their profits to their shareholders, but that still seems like a lot. And if they have any kind of financial emergency or financial problems, that could spell disaster for the company. They do have a 5-year growth rate at 3.75%, and since they are a dividend aristocrat, they have grown their dividend over the last 25 straight years. And their dividend amount here for monthly is listed at 25 cents, but it's actually 0.2475, and they just don't have that many decimals on this website that rounds up. And the ex-dividend date is towards the last day or two of the month, depending on when that date falls. And then they typically pay out their dividend towards the middle of the next month. And they do have a monthly dividend payout, so if you miss 1 month, it's not that big of a deal. You can simply buy more and get the dividend over the next month as long as you buy before the ex-dividend date, if you choose to. For the company's website, they have properties all throughout the United States, the UK, and also in Spain. They also have a list of their top 20 clients. I am going to be going over half on this screen, and then I'll just shift the screen over for a second and be able to show that, but I wanted you to be able to read the names, so 4% of their portfolio is for Walgreens stores, 3.9% for 7-Eleven, 3.9% for Dollar General, 3.5% for Dollar Tree, FedEx Buildings, LA Fitness, Sainsbury's, BJ's, CVS Pharmacy, and Walmart/Sam's Club. That makes up about 20% of their portfolio right there in those. And now for the second part of the list, they have AMC Theaters, B&Q, Regal Cinemas, Red Lobster, Tesco, Tractor Supply, Lifetime Fitness, Home Depot, Fastmart, and Circle K. So I do also want to go over their earnings. I'm not looking at their financials right now. I'm looking at TradingView. I just find it simpler to read it this way. I'm focusing on this part right here, their earnings. So as you can see, over the Q2 2021, the red is their estimated, so the whitish silver is their estimate, and the red is actually their actual earnings for that. So as you can see, it's been down quite a lot over the last year, which is why their stock has been down. But we'll see how they do in Q2 of this year. Now I'm going over their financials. This is also on TradingView, just from their own financial statements. Just easier to read this way, at least for me. The blue bars here are the revenue, the orange is the net income, and then the purple line is the profit margin. So this is an annual list right now. So in 2017, you could see they had about a $1.8 billion in profit of 26.22%. And they had pretty good revenue and okay income. And their income did rise as well as our revenue in 2018. Same thing in 2019. And even in 2020, their revenue went up and their net income just went down a little bit. But as you can see, ever since 2019, their profit margin has gone down year after year, even with the revenue going up each year. So that's a little bit concerning for me, at least. And then for their quarterly results in Q1 of 2021, they had pretty good revenue of $440.3 million, net income of $86.74 million, and a profit margin of 19.7%. Their profit margin did go up in Q2 of 2021, up to 26.49%. Their revenue went up a little bit, as did their income, and it stayed fairly close to that for revenue in Q3, and same thing for income. And their profit margin did go up a little bit to 27.77%, but then in Q4, their profit margin dropped substantially to just a 0.59%. Their revenue went up to $679 million, but their net income dropped significantly to $4 million. And then their revenue went up again in Q1 of 2022 to $804 million. Their net income went back up to $199 million, and their profit margin shot back up to 24.77%. So I would be interested to find out more about what caused this drop in Q4 2021. So now I'm going to be going over the options for Realty Income just on Robinhood because they have the easiest interface to look at. Again, this isn't financial advice. I'm not telling anyone to invest in this company. This is just to give you a background to let you decide for yourself if you want to do further research and want to invest. But this is a good framework. So, for instance, if you want to lower your cost basis and make a little bit of extra money, you could sell the $62.50 strike price. Basically, by selling a put, you're entering a contract to where the buyer will pay you $1.23 per share. And since an option is 100 shares, that means you would get $123, lowering your cost basis from $62.50 to $61.27. And you would get to keep that money. So, but if the stock price goes below $62.50, then you have to buy 100 shares at $62.50. So that's why Robinhood would require $6,250 in collateral in order to purchase 100 shares. So that's a decent way if you decide you want to get the stock and you have the money to do the option. You can earn a little bit of extra income on a monthly basis because they only have monthly options. So you can't do this weekly. And then once you have 100 shares, if you want to earn a little bit of extra income on top of the dividend, you can sell calls. So for instance, if you had purchased 100 shares at $62.50, you could sell a call at $65. So that means you would get paid $1.78 per share, or $178. And plus, if the stock price goes above $65 and you get called away, then you would also have made the profit of $250 from the difference in the strike prices. So you would have made decent profit. The options expirations are typically before the ex-dividend date, so typically that won't be an issue unless stock price happens to fall or rise, depending on if you're selling a put or a call. The call is more dangerous with this because of the ex-dividend date and getting the dividends. So for instance, if you had sold a $62.50 put and it got exercised and you had 100 shares, and let's just say on the 29th of July, the stock price had dropped to $62, then it's possible the buyer could exercise their right to get those shares. And since it is before the ex-dividend date, you would not get the dividend for that 100 shares, the buyer would. Thank you for watching, and I hope you enjoyed the video and found it helpful. Just as a reminder, this is not financial advice. This is just a broad idea to let you decide for yourself if you want to do more research on this topic and then this stock, and decide for yourself if this is stock you want to invest in. I hope you have a good week in the stock market. And again, don't forget to hit the like and subscribe button down below. It does greatly help out my channel.